So we like to talk about different mortgage terms when we're doing loans here, and sometimes when we talk to you, we talk about DTI and PITI and LTV, and we forget that we use these terms all the time. You may only use them once, maybe twice, or even 3 times in your whole life. So, you know, we like to slow it down and kind of go over the different terminology in a mortgage. So the first one is DTI, which is debt to income, and that is our debt to income ratio. Basically, it is taking your income and your debts and figuring out the percentage of your money that goes to, or your income that goes to, paying debts. Now, when we go to qualify you, there are pieces of the puzzle. There's always the credit piece, there's the property piece, there's the income piece. Debt to income is your income piece, and you have to fit within certain ratios in order for us to qualify you. So the way we figure that out is by looking at your debt to income ratio. That would be your DTI. Another term that we use would be LTV. That is loan to value. That is based on the property. That is based on either the purchase price of the property or the appraised value, whichever is lower. Then we take away the amount of your loan. So that's how we figure out whether you're putting no money down, 5%, 10%. Loan to value on different programs it's different for every program. So FHA, for example, will take 96.5. FHA is one of the lower ones. Now, a conventional normally is at least 5% down, but they do have special programs like Home Ready and Home Possible. Those are sometimes 3% down. But the thing with FHA and conventional, FHA is little more lenient on the guidelines and lenient on where your money comes from as far as the gift. Home Ready and Home Possible and conventional, they usually require that 3% to be your money. So there are some differences there. But that loan to value is how we figure out which program you actually qualify for and how much of we are going to finance of that property you're buying. Another one would be PMI or MIP. I know it sounds kind of the same, but they're two different things. Private mortgage insurance, PMI, is tied to a conventional loan. Conventional loans, anytime you put less than 20% down, you have what's called PMI or private mortgage insurance. It does nothing for you. It insures you to the lender. So should you default on your loan, the private mortgage company is going to pay the lender, and then they are going to come after you to try and get the money back in that foreclosure or whatever that is. MIP is mortgage insurance premium, which is associated with FHA, and that is the FHA mortgage insurance for insuring you, again, to the lender. So that's what mortgage insurance, PMI or MIP is. And then the last one I want to touch on is PITI. That is your principal, interest, taxes, and insurances. Now, again, we use PITI all the time. Basically, it's your mortgage payment, your monthly mortgage and payment that you are going to pay in order to own that home. Principal, of course, is the amount of money you're paying on your loan. The interest is the interest accrued to pay that loan. Taxes would be whatever your real estate taxes are. We take the yearly amount, divide it by 12, and put that in your monthly payment. And the same thing with homeowners insurance. That's what the insurances are. Sometimes it's homeowners insurance and flood insurance. Sometimes you have to have other types of insurance, but generally it's homeowners insurance, which we call HOI, homeowners insurance, HOI. So there are a lot of little acronyms and things like that that we do that, but that's basically your principal, interest, taxes, and insurances. So those are some of the main terms that you will hear on an ongoing basis when you're talking to someone about your mortgage or about getting a mortgage, or terms that you need to know. So you have any questions, call me. I'm here to help. I'm here to educate you. I'm here to offer advice. Also here to do a loan for you. So give me a call, Dawn Hall, Van Dyke Mortgage, 239-789-7561. Your lender for life.